Hey, Federal Reserve, stop talking. Hey, it's Eric Osses here with ericismybanker.com and CMG Home Loans with my weekly update on mortgage rates for the week ending May 19th, 2023. Happy Satende Mai for all you Norwegians out there, and happy Mount St. Helens Day, May 18th, for all that followed that back in 1980. Well, the Fed governors are back at it again. It was looking like it was going to be a good week for interest rates, but an ugly pattern by the Federal Reserve reemerged this week, where every time rates start to fall, Fed governors jump in to make speeches in an attempt to talk those rates back up. This week, it was St. Louis Fed Governor Bullard and Dallas Fed Governor Logan who must have had their turn to do it, making speeches saying that they're not so sure they're going to pause future interest rate hikes. That was not necessarily good for mortgage rates. The data this week, and our bond market is pretty much data driven, was fairly benign. Retail sales for April were lower than forecast. That's good for rates. Housing starts were down. That's good for rates. Building permits were down. That's good for rates. Jobless claims were the only one that wasn't so good for rates. They came in about 10,000 jobs, fewer people filing for unemployment, to really help the interest rates. We want to see more people filing for unemployment. There's one statistic that we really do want to watch. That's the more important one, and that's LEI. It's the leading economic indicators statistic. And LEI comes out by the Conference Board, was negative again this last month for the 16th consecutive month. A negative LEI is a signal that there is a recession coming. In fact, every time we've had negative LEI, a recession has happened, typically within 12 months. Well, we're on month 16 right now, so we're due, any time here. We just gotta wait this out, I guess. And although the data was mild this week, one thing that did impact interest rates was heavy selling of bonds by banks, as these banks have scrambled to generate liquidity against withdrawals from their banks. There is still heavy withdrawal activity going on in the banking sector, and when the bond sellers outnumber the buyers, interest rates can go up. So what does that mean for interest rates? Well, gosh, mortgage rates are going to head lower soon. It just hasn't happened yet. Let's give a rundown right now. Here is the national averages for mortgage rates for this week. Conventional 30-year fixed rate, 6.82%, up 0.33 from a week ago. 15-year fixed rate, 6.19, that's up 0.29. FHA and VA 30-year fixed rate, 6.44 to 6.45. Those are up about 0.33 from a week ago. 30-year fixed rate jumbo, 6.5%, up 0.16%. 5/1 ARMs, 6.85. I don't put a lot of emphasis on that program because we have an inverted yield curve, meaning that shorter term loans actually can pay a higher interest rate than longer term loans. So speaking of rates, though, we've got some good news for folks looking for second homes or non-owner occupied properties. Last week, I was talking about recent changes to the LLPAs. Those are loan level pricing adjustments, where our government put some significant increases to the interest rates for second homes and for non-owner occupied properties, investment properties. If you're in the market for that type of a program, I have some good news for you. Our company, CMG Home Loans, just released a new loan program that securitizes loans directly with Wall Street, completely bypassing all these LLPAs that were put on by Fannie Mae and Freddie Mac. So we've done an end run around that. As a result, our rates on second homes and investment properties are very attractive, especially compared to Fannie Mae and Freddie Mac loan programs. So if you're thinking about purchasing an investment property or second home, reach out and we can run the numbers. And I'm always happy to give you some really useful tools if you're thinking about buying an investment property. I teach classes on how to analyze an investment property by looking at the cash flow of that property to help determine what price should you pay for it based on cash flow goals, or what type of a rate of return can you expect to receive on that property, assuming the rents that you're going to get. So just reach out. You can call me anytime, 206-915-3742. You can email me, eric@ericismybanker.com, or look for me on social media. Catch me that way as well. Just look for Eric is my banker and you'll be able to find me. That's all I've got for this week. I hope you have a great weekend. Be sure to reach out if I can answer any questions for you. And I'll talk to you next week.